Hello again, everyone. It's Vince Four from TradeWinds.com, and this is our update for January 25th, 2017. Let's take a quick look at today's markets. While history has been made, the Dow surpasses 20,000 today, closes above it. You can see here a fresh new all-time high, 20,016 on the Dow futures. A great day. It gapped up and it stayed up there. No question. This looks real. We'll take a look at the weekly charts in a second. The S&P 500 was up 18, while the NASDAQ was up 55 points today, and the Russell was up 13. So the Dow and the S&P did close above those highs. Now, we haven't had follow through yet, so we do need to wait for a trade above today's high, but I think it's pretty much a given at this point. And if you look at the weekly charts, they look really good. And so far, even though this weekly bar has not closed yet, we do have this bullish engulfing pattern here forming, and we have nice, strong momentum, headed higher here, the slope on that 20-period moving average. So overall, a very bullish picture here for equities. Normally, if you look back in history, every time one of those 1,000 thresholds once we trade above them, we continue to trade higher for a period of time. So I fully expect that to continue. Now, aside from equities, though, everything else was down. Bonds taking it on the chin and dropping another 1.5 today. Gold was down as well, and this weekly picture on gold certainly doesn't look good. Now, again, it is early. The weekly candle here has not closed yet, but if we close like this, let me get the other drawing tool here. If we close with this bearish engulfing setup, then yeah, it looks like we're certainly headed lower. Crude was also lower today by about 43 cents. The weekly chart still looks pretty good. Let's have a look at the daily. There we go, slightly lower. And the dollar continues to drop back here, also looking for fairly bearish at this point. So now that 20,000 on the Dow has, is now officially out of the way, what number do we focus on next? And unfortunately, it's another number with 20 in it. This time it's 20 trillion. That's the debt level we are going to have within a matter of weeks. That's the estimate, is that in a few weeks, the government debt will surpass that 20 trillion mark. And with a number of the things that Trump is planning to put into place, his infrastructure spending, spending on the wall, and a few other things, I think we're going to quickly mount that debt, which is going to be the number that's going to come into focus very, very quickly. Now, as long as rates remain low, it's not as big of an issue. Right now, that 20 trillion mark is about 2.9% of GDP, but should rates go higher, the interest on that debt is going to be much more difficult to keep up with, and it's going to be a growing concern, especially if it goes much higher than 20 trillion. So that will be the number that you will hear being talked about a lot in the near future. Okay, for now, things look pretty rosy, and although I think we're in the 9th inning of this bull market, and I really don't think we're going to extra innings. I think we have one more leg higher here before a much bigger move lower. But having said that, things look pretty rosy right now across the board for equities, and we'll just go with it until the charts tell us otherwise. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.